Welcome back everybody to my channel. So I thought I'd do a video today on my USDCAD trade that I took. Now before I do that, I just want to show you my pound USD trade that I attempted to take yesterday and I missed. I was really bugged about this, but you know what, it's Forex and it happens, so we just have to let it go. But I was identifying on this structure the fact that the market was in a strong uptrend, and although we don't really have a trend break on this structure, what we do have is a structural high and then a lower high forming. Now you can see with this lower high that price was sitting around this area for about 4 hours. So it was clearly evident that the bulls were lacking in pressure, and in terms of who was really starting to take control of this market was starting to develop, which was the bears. So once I identified this, I just needed to see a momentum shift. So that just simply means seeing the market break below structures that it weren't able to break below for a very long period of time. So once I identified that this candle had broken, just like I've taught in my YouTube video in terms of finding those sniper entries, I decided to go in with a sell stop on this trade. So I identified the wick areas in and around these levels here, and I set my sell stop exactly where these wicks were. So just accounting for both of them, allowing for the market to have some breathing room to come back to the upside, whatever it wanted to do, collect orders, la-di-da-di-da. Point being, this is how I set the trade with my sell limit. I had my stop loss way above structure. I believe it was around a 10 to 15 pip stop loss. It's besides the point that I'm trying to illustrate here, but this is what I went for. Stop loss is way out there in space, so the chance of me being stopped out if the market is going to continue in this bearish structure is pretty low. So I was very confident to take this trade and set the trade, closed down my charts, and by the time I came back, look at what happened. Price had come almost to my sell stop entry. We're talking about, boy, just minimal pips away from triggering me into this trade. And then as you can see, the market starts to go in my direction. As the market was in and around this level here, I did see that it started to create a wick. And at this stage, I was contemplating jumping into the market and just really going in for this as an aggressive entry. It wouldn't have made much of a difference in terms of my stop loss, because my stop loss would have been still out of range above these structures. And as I wasn't expecting the market to continue to make a higher high, I was expecting it to continue down to make that lower low. It still would have been fine. But as it was Monday, I was just in the mood, and I said to myself, do you know what? I mean, in the mood of being disciplined. And I just said, you know what? I'm not going to jump in, let it go. And if it comes back, then it was meant to be. And if it doesn't, then boy, it just is what it is. And look what happened. The market just sank. Now, it happens, guys, and ladies. We're not always going to be triggered in, especially if we're using limit orders. And, you know, when I think about this, if I entered this with an instant execution, it could have also gone against me and stopped me out. And I would have been really upset about that. So I think I made the right decision on this occasion. Just a bit sad to see this drop about 140 pips without me being in it. But it is what it is. I then decided to take another trade, which I'm not going to go over, and I end up losing that trade just for a very small % loss on the risk that I was taking. But it just happened, so I end up losing that, having a losing Monday. Anyway, let's move on to Tuesday. This was a trade that I took. So same thought process, really. I saw that the market was in a strong trend to the upside. I could start to see that price made structural highs. Now, this is just an indication of a higher high, nothing else. Then I started to see a lower high being formed. And when I'm looking at this trade, I can see that these structural levels are just being violated constantly. So once I saw that this level had been broken in this market structure, I just said to myself, do you know what? It's time to go in, look for a trading opportunity once the market starts to create a level. And when I'm talking about a level, I'm just talking about a wick rejection on the market where price is creating a level. So what I did is I decided to wait for price action to create that level. Here you have it. Let's clear these out here. And once I identified this, I just popped my key level here like this. Now, for me, I'm seeing this structure as now being broken. Potential reversal in this market. We saw a lot of dollar strength yesterday in the markets. And if we take a look at the dollar index, what you'll find is that the structure on this market from the morning analysis that I did was indicating that it was failing to make these higher highs. So with that in mind, as confluence alongside USDCAD, we definitely was expecting some sort of weakness. Well, definitely is not the right word, but we could have been expecting some sort of weakness. So along with that confluence, I went over to USDCAD. I saw that this level was being created, And then what I did is I waited for this hour, the 4 hourly candle to close, which closed as a strong bearish candle to the downside, anticipating the next 4H candle to follow on with that momentum. I scaled down to my 30-minute time frame, and then it was time for me to enter this trade. Now, as you can clearly see, you may have not recognized it on the hourly time frame, but this is how the structure was moving. Bullish to the upside, making higher highs, higher lows, higher highs. Then eventually we made lower lows, lower highs, lower lows. So now I have this level here in the market, and I decided to go into this trade with a sell limit. Now, coming off the back of yesterday's trade on GU, missing that sell limit, I was a bit anxious today. That's the God's honest truth. I was a bit anxious. I was just thinking to myself, do you know what? If I miss this one again, then I'm just going to really feel bad about it. But, you know, it just happens. We're human, and we're not going to remove all emotions. And you guys must understand that. We're just not going to remove all emotions. There are going to be times where you're still going to feel a little bit anxious. And yesterday's trades are going to affect you for today's trades. But it's just really trying to regroup yourself and pull yourself back into the zone. And if you can do that, then all well and good. So I went in for this trade. Price action, just pop it up on my phone, is at 40147. 40147 was my entry on this trade. And then I had a 7 pip stop loss, I do believe. 7 pip stop loss, and then I went for a 1 to 3. Didn't set the TP, but I had a 1 to 3, end up closing at 1 to 4. And this is how the trade looked. So when I'm looking at this, I was waiting for that 4 hourly candle to close. So this one was the close of that 4 hourly candle, 9:30 into 10, as you can see at the bottom there. And then once that new 4 hourly opened, I set this sell limit. As you can clearly see, let's remove this. I had my stop loss way above structure. Now, normally I'd set it something like this around the wick areas, but I just didn't want to miss taking this trade. So this is how I set it, down on the lower side. And I just waited for the market to pull back into this level, trigger me into the trade. And actually, hold tight. This was the candle that I saw. And then that's when I set the sell limit at this level here, accounting for these two wicks here, not the one that's just gone to the upside, okay? But I just wanted to make sure that my stop loss was above the structure, to make sure that if the price action is going to continue to go down, it's going to go down. And I'm going to avoid being stopped out on this trade if that's what it's going to do. So it was in a very safe place. So I set my sell limit at this stage, in actual fact. And then as you can see, I was literally just triggered into this trade by the smallest amount, as you can see here. And then I rid this trade down. And remember, all I'm thinking in the back of my mind is dollar index starting to show signs of dollar weakness, starting to see the structural change on the hourly. We have a level created here on the 30-minute time frame. Beautiful lower high, multiple wick rejections. Definitely recognize this as a key area in the market where sellers are sitting around. And all I'm anticipating now is for the market structure to continue pushing to the downside. So this is what happened. The market literally just plummeted. I did close out at 1 to 4. I felt very blessed for it. Could I have gotten some more out of this? Probably. I don't know what happens after this. Didn't really follow it. Well, there you go. By the time price closed on that 4 hourly candle, which was this one here, it moved to about 1.59. Let's just call it 1.6. So I could have held it out if I really wanted to for that candle close, but I didn't. But anyway, 1 to 4 is great. And this is just a fine example for you guys to really be following here. Some days you're going to lose. Last week I spoke about my losses as well. Last week I spoke about not managing my trade to break even and seeing price come back and take me out. Like, there's going to be times that this is going to happen, but you have to understand that your risk reward ratio is going to play a massive part in being consistent and profitable as a trader. So if you do have a bad day, try to get up, walk away, clear your mind until you are ready, and then come back either on the same day or just come back the next day. It's going to work out best for you to do that. It's going to help you to avoid over trading and revenge trading and all the other lark that ends up leading to blowing accounts. So just bear this in mind. You know, some days you're going to win, some days you're not, but this is just all part of trading. And I'm just telling you now, I don't want to be scrutinized for saying this, but even if you're trading at around a 22 to 30% win rate with really good risk management and good risk to reward, you still can make a serious ton of money in this business. And I know some people are going to say some silly things in the comments like, well, who would trade a 22% win rate strategy? I'm not saying that's what my strategy is. I'm just saying there are people out there that are trading and making really, really good money from it. And it's not just because you only have a 22% win rate. It's because you have a 22% win rate with a 50% break-even trade because you have superb risk management, and then the rest is losing. Okay, if you understand numbers, then you understand where I'm coming from. So just simple analysis on this USD CAD. As you can see, dollar index was telling us a lot in terms of failing to break the structural highs. We started to see the reversal playing out on the dollar index, and as you can see, that starts to indicate dollar weakness. Even if it's just for a short period of time, you still can get in these trades. We can see here on the hourly time frame that the structure was pushing to the upside. We finally made structural lower highs and lower lows, as you can see here on the 30-minute time frame. And I'm just looking for a key area in the market where price is going to be breaking previous structures, as you can see here, and then coming back to retest these levels, creating a retest level in the market, wick rejections, showing signs of bullish depletion, and looking for that continuation bearish move to the downside. Great trade, great risk reward ratio, really nice profits for the day, and that sets me up good for the rest of the week. So I wish you all well for the rest of the trading week. As I always say, if you enjoyed this video, please smash that like button, subscribe, and until next time, take care.